Hi, I'm Matt.
And I'm Colleen, and this is Mortgage Matters. Today, we're going to be discussing the market and some of the challenges that have been created in today's market and some of the solutions that we've come up for a way to beat the system.
So, Colleen, you mentioned a little bit to me earlier that you've been out in the market. You are the person that's kind of on the front line of things, dealing with borrowers day to day. And obviously, I do on the back end of things, but you kind of sometimes have that first interaction with them. What are you hearing about today's market? Shock us.
Well,
with some
where
news.
I used to talk about, I'd have real estate conversations, and generally it was about what kind of home someone was looking for, why they want to sell their current home, but it was mostly about the home. And I did an open house this weekend for one of our properties, had over 65 people come through, and almost all of my conversations were about interest rates.
Interest rates? Why on earth?
Well,
rates. Why rates? Unless you've been hiding under a rock.
Well, because they were at 3.25% average, and now they're still in the sixes. Some may be in the sevens. But what I think people don't have a point of reference on is that historically we are still below the 30-year average of mortgage rates. And where I used to have conversations about the kind of house someone was looking for, it had to have this, this, and this, or they're selling it because they need a home that has this, this, or this. It's not that way anymore. Now everybody's concerned about what kind of a house can they get for the mortgage rates that are out there now with the cash they have on hand or the equity they already have in their current home. And I think it's hard to get people to understand that we actually are still in a good place with interest rates.
When we talked about this a bit, there's a reason that it's hard to get people to understand. It's because we're not comparing apples to apples. We're comparing apples to oranges. So the last sort of 52-year average is 7.75. So we're still a little bit below the 52-year average or 50-year average. Back in the 80s, rates were up.
This is literally, if you can, I hope you can see that.
Yeah.
But we literally are still below the average mortgage rate since 1990.
Right. So as a perfect example of what I meant.
Since 1980.
1980, yeah. 1980 was 18%.
Yeah.
And then obviously over the last few years, we got way down. But a perfect example of what I'm talking about, not comparing apples to apples, is sure, my first mortgage back in
my parents built a home in Roswell at 18% in 1979.
Yeah. Well, mine in
But the house didn't cost that much.
Right. 2002, I was at 8.9%. But in a home that's probably $350,000 now, that was $135,000. So 8.9% with a $107,000 loan is a lot more digestible monthly. Okay. My mortgage was, if I recall correctly, and I'm sure I had taxes and insurance. I know I had escrow taxes and insurance and mortgage insurance. It was like $890 a month.
Yeah.
You're in the same house today, $350,000 with a 7.25% interest rate or something, and you're looking at a $2,600 a month payment.
Right.
So,
big difference.
So yeah, people, first-time home buyers and even just new buyers are out there, and it's a bit frustrating hearing us old heads constantly saying, I remember when rates were 18. Well, it wasn't quite the same game.
Yeah. And home values were lower.
A lot lower. So there is some pain involved in the market, and people are trying to figure out how to deal with some of those issues.
Well, and one of my first conversations that I have with people is that I want you to talk to a mortgage broker first, because you really need to have, what they do is they scope your search. These are your parameters. This is what it'll cost you. And that's where we find what we find. However, right now, particularly because, like Matt was saying, it's not apples and apples, it's apples and oranges, where we've got higher home values with rates that are coming back up to the average rate, even though they're still below. But it does present some challenges as far as affording. How much money do you have to save for a down payment? Because the home values are up, that means your down payment's going to be higher. But one of the great things that happens in a situation in a market like this is that mortgage brokers like Matt have a variety of products that can address some of these issues, get you into a home, and kind of skirt the system a little bit. It's still going to be, and interest rates are what they are, and they're not going to go back down to 3.25%. They're not.
Right.
I would give you my brand new Mustang if they
gonna
go back down to 3%.
Make a note of this URL for this one.
You should.
Bring
It's
it
a
back
really
when
nice new
when
car.
they get down low.
But I'm telling you,
It could be a classic by
actually,
the time
I'll
they
give
get
you
back
his
to
Porsche.
325.
No, but they're not going back down to 3.5%. We're going to have to deal in this realm of interest rates and home values. But it doesn't mean that you're priced out of the market or that there's not a product that you can afford. There are, and I think that it doesn't get enough play. It doesn't get enough talk in the news or in markets. When you look at the Market Watch on any given news channel, they don't talk about different mortgages that can help you skirt the system or still get you into a home and stop paying rent and get you building your own equity and wealth.
So UWM, United Wholesale Mortgage, just recently last week came out with a product that they've had before. They are actually doing a 1% down conventional loan, and it's a little misleading. It's 3% down.
Okay.
But they will put up the first 2% up to $4,000. So it's very sort of low income, first time home buyers.
Sure.
There's an income limit, and I think it's 50% of your market's average income.
Okay.
So if for Forsyth County it's $90,000, it would have to be a $45,000 income limit.
Right. But that gets
just as an
somebody
example.
who's at a $45,000 pay level, creating their own wealth.
Absolutely.
You don't have to have, it's like buying silver. You don't have, or gold. You don't have to go and buy giant chunks of it. You just start small.
Right.
And then you build, and then
when it's important to
you create that wealth, and then you get better
continue
products.
to remember that it's not buying, it's investing. Right. So you're not spending the money, you're investing it. The money that you put down on a home into, yes, you pay closing costs and those types of things, and that's
there's a cost.
That's an expense. Sure. But any down payment that you put down, or that UWM puts down, or another lender or another product or whatever is invested, and it's money that's still yours.
Well, and you also have tax benefits.
Yeah,
that come with the first year that you purchase a home. Incredible tax benefits. They don't come every year, but that first year particularly, you do get a break on the tax side.
Few years, because your
house poor.
Your all the interest that you pay on your mortgage is tax deductible, and so half your mortgage payment for the first 5 years is interest.
Yeah,
they get it up front. They don't wait to get it on the back end, because I think the average homeowner is in a home for about 7 years.
Yeah.
But that's just an example of one product, and this is why you need to speak to Colleen or myself when you're looking for professional advice about what to do. I think we forget as a consumer, when I'm going to the grocery store later, and I'm not going to get there and say to myself, "What's your budget?"
Right.
I'm not
you just
gonna
go
sit
buy
there,
what you need.
I'm not going to sit there with a pad and pen and figure out my budget. And the second biggest thing we probably buy on average, during your lifetime, most often is a car. And, you get a car and you're like, I kind of want my payment to stay under $400. And you wind up with a $480-something payment because it was really shiny.
Right.
And that's, kind of how you figure out your budget on a car, which is a massive purchase.
Right.
And so when it comes to houses,
sometimes for cars, you're sometimes paying quite a bit of a percentage rate depending on your credit.
Yeah,
or what kind of car,
absolutely. Yeah, much more than a home.
Right.
And it's a shorter term.
Yes.
It's obviously a lot less expensive. But the point is, I don't think that people
don't
emphasize.
let rates scare you.
Yeah, that people don't emphasize budget enough.
Yeah.
And at the end of the day, the budget comes from a very specific set of numbers. Yes. So it is what it is. People will be like, yeah, I would love to shop in the 350, 400,000 range, and then you pre-qualify them, and you're like, that was never a thing.
Right. That was never going to be an option.
It was 275 was like your max. So before you get too excited, if you are even thinking of purchasing a home, speak to a mortgage professional.
That's the
get your
first
budget.
call.
Get your budget.
It really is.
One product that we were discussing a little bit earlier is a renovation loan. There are different types. There's a conventional renovation loan. There's an FHA, two different FHA 203K loans. That the conventional one, what happens is, let's say you go and you want to purchase a home and it's $250,000. It's a little beat up. It's conventional as is, but you want to borrow an additional. I'm sorry, 200,000.
Right.
But you want to use 50,000 to put into it.
Right.
It's a bit of a clunky product. It usually takes 45 to 60 days to close, just because there's a lot of moving parts. You have to get, we have to make sure that the contractors that are being used are all authorized contractors, for the lender. And so there's a bit of paperwork.
You'll have to pull
involved.
permits.
Yeah, all that kind of stuff.
All of that.
But at the time prior to the closing, the appraiser goes out and they look at the $200,000 property, which may be an old farmhouse that's kind of run down on a beautiful property.
And depending on what your renovation plan is.
Yeah, they look at it, they have the renovation plan, and they look and say, okay, this is $200,000 worth of property and structure. Fair. $50,000 is going to go into it. It's going to look really fantastic at the end.
Yeah.
6 months from now when it's done, I would say it's going to be worth $315,000. And that's the appraisal.
Yeah.
They don't come back and do a final appraisal.
Right.
That is,
after your work is done.
That's the appraised value at close. So
then let's extrapolate that so that I think I don't want us to get lost in the weeds here a little bit. But what happens is you are taking out that mortgage. We actually did the math based on a $250,000 home.
200 plus the 50 renovation.
Right.
Yep.
And then we're going to take out. We're at 242.5. With the loan
you have to
origination,
put down 3%
right?
On the loan.
So your mortgage is 242.5, but in 6 months you have, let's say your home does, then you're ready to sell it for 315. You have just created an enormous amount of equity for free.
Yeah, in a very short amount of time. So
and
so
equity
if it appraises,
equals personal wealth, because you can extrapolate that to, it's not as easy to liquidate it, but if life threw you a hardball, you would have hard cash that you could liquidate the home to.
So let's say it appraises at the end of 6 months for $312,500.
Right.
So you've got $70,000 of equity in your home now. Don't forget,
in 6 month period, that's a pretty good
6
return on
months.
investment, if you ask me.
That's $140,000 annual income
listen,
after tax.
That's an ROI that flippers look at, and that that's how they're able to do that.
So you can keep your equity in the home and be happy with that. But a lot of times what folks will do, the renovation loan, the interest rate's a little bit higher than a conventional 30-year primary
a little riskier
loan.
product.
So what a lot of people will do is just refi at the end, and you can actually eliminate mortgage insurance because you're lower than 80%
That's
loan
right,
value.
because you've created equity.
Yeah.
So it's a fantastic, and I think that's when we were saying there's solutions that kind of skirt around the system a little bit. These are the kind of products that you can find out about when you speak to a realtor and that realtor asks you to speak to their friend that's a mortgage broker. This is why we want you to talk to them, because they have the ins and outs of products that can really create wealth for you.
Yeah.
My job is to get the home at the right price, the deal done on time, and protect them legally and protect their wallet is my fiduciary responsibilities first and foremost. But I can't do my job very well unless you've got somebody like Matt in your corner who's giving you the advice that you need, that's going to get you into a better house than you could have afforded normally. And he's got all those options ready, where a lot of people, if you just go to your bank, they're going to say, oh, FHA, conventional.
Yeah.
And that's all they're going to give you.
It's not even a bank. I mean, it's tough to keep up with products and things that are available. You hear about stuff all the time.
Like we talked about the USDA one, which is not a very common one, but it's a terrific product.
Yeah.
This home renovation loan, again, not super common, but it's a fantastic product.
Wonderful product. Yeah. Down payment assistance. Again, the interest rates are a little higher, and the interest rate for the down payment part, that we actually do have one available now through our broker channels that is 100% forgivable as well. I think it's after 5 years. So you have to stay in the home for 5 years, and then that down payment you were assisted
is your
with
equity now?
is your equity. So there are a number of solutions to the present market.
I agree. I think that if you only listen to talking heads on TV, you're not really informing yourself in this market. You're not doing yourself a service by not having real hard numbers like somebody like Matt can give you. And once he gives you those hard numbers, I'll find you that house. So Matt, today we have talked pretty extensively about the renovation mortgage, which is a fantastic product. We did mention that it does have a slightly higher than average rate,
right?
Even though you can refi 6 months later after the renovations are done, and you've now gained over 20% equity, so you can drop your insurance. However, there's still regular mortgage products out there, conventional FHA products.
Yeah.
What are the rates looking like on? I know we said the renovation one was a little higher, but a little higher than what?
So it's a good question. It's always a little bit of a how long is a piece of string question, like what are rates? The interest rates, they're simply based on the total makeup of your file,
right?
Your financial profile. And a lot of that is affected by your credit score. So FHA,
and credit history.
Yeah, credit history, which affects the score ultimately.
Certainly.
We have a loan officer on our team. I just sort of posted his on social media the other day. He just qualified someone with a 558 mid score.
Wow.
For an FHA loan. So yeah, we're qualifying folks down pretty low, which is good. Now that's probably not a fantastic rate.
Well, I mean the products. I mean the market has become more stringent as far as lending practices go since 2008 and 2009. And although this situation, the market that we're in right now, feels kind of similar, it's really not, because there's not a lot of unqualified homeowners out there, where in 2008, 2009,
right,
we were putting people in homes that we never should have been put into a mortgage situation.
10 years leading up to 2008.
Right.
But
agreed.
Yeah, so there are borrowers out there that do qualify.
Do you have to pay a higher rate if you have that low of a score?
Yes, your rate is going to be affected, because your rate is based on a risk analysis, right? And your credit score, if it's low, is a pretty good indication of risk, although it's not so low that you're not qualified.
Right.
Banks are, they always say banks are the people that will lend you an umbrella until it starts to rain.
That's right.
So yeah, if you've got plenty of money, you get to borrow money a lot less expensively. But the trick is to not get emotional about that fact, but just get on the team, right?
Yeah.
Just start to try to make decisions.
Get off the bench.
Start to make decisions that allow you to make good financial decisions, work on that budget, pay down credit card debt, make on time payments over time.
Create your wealth.
The credit score, your credit score is really an incredible tool that can be kind of the gateway to starting to develop wealth. And what I mean by that is this: my credit score has been up and down and up and down over my lifetime.
Everybody's has.
Anyone that's had a divorce, anyone that's been through a 2008, anyone that's lost a job and had to lean on credit cards and missed payments and all those kinds of things.
Had a sick family member where the insurance costs weren't
massive
met,
medical bills that didn't get paid, and it's a collection. It
lots
happens,
of situations.
Yeah, of course, life. It's just life happens to everyone. If you can get your credit score under control, you start to get credit cards, and then now you need to use those responsibly, but having large,
access to money that isn't yours.
Right, $10,000 plus lines of credit and a credit card, kids, is for building your credit score, and it's an emergency fund. That's it. We do want to use it responsibly so that it shows on your credit is being used. If you've got to buy some clothes or groceries, do that once a month and then pay it off and continue to roll using it. But there are credit cards out there. Once you sort of get your scores up to the 680s and on up a little high, 700s, once you get 700 and above, you can pay $500 annually for a Delta SkyMiles Amex card, and you get cashback rewards. If you have a credit card balance with someone else that's $3,000 and you're paying 12 or 15 or 20% interest on it, you can roll it over to a new credit card with
zero interest for like 15 months or whatever.
Months. And you know, it's not great financial advice to kick things like that down the road, but it's great if you can.
But it's solutions to maybe some situations that you're finding yourself in with the economy the way it is. You know, Matt and I were discussing the cost of grocery. Everything costs more.
Yeah.
So no matter what your job is, what your income level is, we're all in the same storm. We're not all in the same boat.
That's true.
So some people have big sturdy boats because they've made good financial decisions or older or whatever it is. And then there's some people who have, it's a great boat.
Newlyweds.
And it's terrific.
Yeah.
But it's taken on a little bit of water.
Yeah.
Because we're getting priced out of groceries. We're getting, the price of gas. Everything has gone up. But it doesn't mean that there are no avenues for you to start creating your wealth, starting with home purchase, not paying rent to pay somebody else's mortgage. And those conversations start right here with Matt and with myself. And the two of us together can find you that home, get you into that home for the right amount of money, and start creating your wealth.
Yeah, yeah. Well, and anyone that's listening to this knows also, so I'm not telling you anything you don't already know. When your boat's taking on a little bit of water, you got to be prepared to bail. Quickly. You've got to, you got to be frugal. You got to stop spending money. You've got to save money.
Make the tough choices.
Yeah. So, and that's obviously that goes without saying. But
eat at home, pack your lunch.
Yeah.
Right.
Absolutely.
I mean, that's the way it goes. Yeah. Iron your shirt. Don't send it to the dry cleaner. You could buy an iron for like what it costs for one trip to the dry cleaner.
Cut your own grass. Let's keep going with examples.
I know, right?
Anything else?
Wash out your Ziplocs and reuse them.
All right.
Okay, I'm getting a little, I like depression era there. So sorry. But right?
Yes.
Anyways, there are ways to do it, and Matt and I can't wait to help you create your wealth. Thanks for joining us. And as always, hit that like, subscribe, and notification bell down there, and share this with all of your friends. And if you have any questions, put them in the comment box so everybody can benefit from the question and answer. Or if you're a little shy, go ahead and reach out to one of us individually. Our numbers are listed below.
Thanks for joining us today on
Mortgage Matters.
Matters.